NUBURU stock is currently trading at $0.28 per share, marking a significant intraday decline of 7.57% during this Wednesday, May 6, 2026 session. While a nearly 8% drop might look like a standard volatile day for a microcap, the reality beneath the surface suggests a company attempting one of the most aggressive pivots in the industrial technology sector. Most investors looking at NUBURU stock right now see a struggling penny stock that has shed massive value over the last year, but the anticipated narrative of a slow fade is being challenged by a sudden, intense focus on the defense and security sectors. The expectation was that this company would continue to focus on industrial welding for car batteries and aerospace components, yet the reality is that they are repositioning themselves as a high-stakes player in non-kinetic warfare and directed energy defense. This shift isn't just a marketing change, it is a total structural overhaul that involves acquiring firms like Lyacon and Techne to enter a global counter-drone market estimated to be worth over $20 billion. The tension here lies in whether their blue laser technology, which was once just a faster way to weld copper, can actually scale into a weaponized dazzler system capable of taking down unmanned aerial vehicles for Tier 1 defense organizations. Recent trading sessions have been characterized by heavy volume and sharp swings, often triggered by news of funded prototype builds or strategic partnerships with groups like Nasdaqstocks. Just last month, the stock saw a massive 30% spike in a single day, only to give back those gains as the market weighed the reality of their $12 million public offering and the subsequent dilution. Institutional activity remains thin, which is typical for a stock in this price range, but the retail interest on platforms like the Robinhood app and through various investing sites has stayed surprisingly high. Investors using Interactive Brokers trading tools or checking the Fidelity mobile app have likely noticed the increased frequency of corporate updates, which NUBURU is using to signal that they are finally seeing initial revenue traction. The common belief is that they are out of capital, but the recent $25 million debenture restructuring and the potential for up to $97 million in gross proceeds through their equity agreement suggest they are building a massive war chest to execute this transformation plan. This creates a loop of curiosity. If the capital is there and the technology is proven in the lab, why is the stock still stuck in the sub-dollar range? The answer usually lies in the execution risk of moving from a research and development phase to a repeatable, scalable manufacturing phase, especially when dealing with international defense contracts in places like Ukraine and the Asia-Pacific region. When you look at the broader market, stocks like Nvidia stock or Apple stock represent the established giants of tech, where the investment help usually centers on steady growth and dividends. But for those looking to invest online in high-risk, high-reward sectors, NUBURU stock represents a classic all-or-nothing play. Unlike Tesla stock, which changed the automotive world, NUBURU is trying to change the fundamental physics of metal processing and defense. Their blue laser operates at a wavelength that is absorbed much more efficiently by metals like copper and gold compared to traditional infrared lasers. In the world of online investing, this technical advantage is the alpha that proponents point to. The general sentiment is that the company is a speculative bet on the future of energy weapons, but the deeper analysis shows they are also integrating AI-driven operational resilience software through acquisitions like Orbit. This suggests they aren't just selling hardware, they are trying to build a software-hardware ecosystem for mission-critical infrastructure. For anyone using a Fidelity brokerage account or exploring individual brokerage options, the volatility here is a reminder of why self-investing requires a deep understanding of capital structure. The company recently completed a preferred equity restructuring, wiping out over $8 million in liabilities, which is a massive step toward cleaning up a balance sheet that has been historically messy. The business model has moved away from purely selling laser engines to a dual-use platform strategy. They are now targeting $100 million in revenue from their defense and security platform, specifically through the production of the Gralian platform for high-intensity conflict zones. This is a far cry from their roots in industrial OEM modules. If you look at the industrial laser market, it was valued at nearly $24 billion last year and is expected to grow towards $70 billion by 2034. NUBURU is a tiny fish in this pond, but they are trying to carve out a niche where their specific blue light frequency offers a physical advantage that giants can't easily replicate without starting from scratch. However, the reality of their latest earnings report showed a net loss of over $70 million for the previous fiscal year, with revenue remaining almost non-existent as they transitioned. This is the valley of death for tech startups. They are burning through cash to build a pipeline that they claim is worth over $6 million in the near term, but the market is demanding proof of repeatable commercial deployment. For those watching on a Robinhood stock trading interface, the daily percentage moves can be dizzying, but the real story is found in the U.S. government demonstrations scheduled for later this year. Comment below how many shares of NUBURU stock you currently hold, or if you think the shift into the counter-drone market is too little too late. Looking ahead, the catalysts are clearly defined. We are waiting on the results of the funded prototype build with NUBURU and the final consolidation of Techne. These are the markers that will determine if the company can scale from hundreds of thousands in billings to the millions they need to reach break-even. The risks are just as clear. Dilution remains a constant threat as they tap into their equity lines to stay afloat, and the reverse stock split remains a tool they might have to use to maintain their listing on the NYSE American. The expectation is that these defense contracts will provide a stable floor for the stock, but the reality is that government procurement cycles are notoriously slow and politically sensitive. Investors using SoFi Active Investing or checking their intelligent portfolio balances need to weigh this. The contrast between what the company says that they are successfully executing and monetizing and what the stock price does, dropping 7% on a Tuesday, creates the tension that defines this ticker. If they can actually deliver those portable laser dazzlers to a Tier 1 defense partner, the current price might look like a historical anomaly. If they hit another snag in manufacturing, the floor could drop further. To navigate this, one must look at the sector momentum. The aerospace and defense sector has been a safe haven for many using Fidelity Wealth Management or seeking investment help during broader market uncertainty. NUBURU is trying to hitch its wagon to that trend. Their technology is being tested for Ukraine industrial deployment, which provides a real-world testing ground that most companies can't access. This is the contrarian take. While the headline numbers look grim, the ground-level activity in conflict zones and defense manufacturing suggests a company that is being integrated into the national security apparatus. This isn't just about a laser anymore, it's about electronic warfare and non-kinetic effects. When you compare this to the relatively straightforward growth of something like Nvidia stock, you see the difference between a market leader and a market disruptor. The disruptor has to fight for every inch of credibility, which is exactly what we're seeing play out in the intraday charts today. The transformation plan led by Alessandro Zamboni is the blueprint, but the market is the judge, and right now the judge is asking for more than just letters to shareholders and press releases about revenue visibility. In summary, NUBURU stock at 0.28 is a case study in expectation versus reality. The expectation was a quiet exit for a struggling laser firm. The reality is a loud, aggressive push into the global defense market, backed by a major balance sheet restructuring. We've seen a clear shift from industrial applications to high-stakes defense contracts, with the company clearing out millions in debt and securing new pipelines for its directed energy systems. While the stock's current downward movement reflects the immediate pain of restructuring and the skepticism of a market burned by past performance, the fundamental technology remains a unique asset. The transition to repeatable revenue through 2026 is the goal, and the next few quarters of billings will be the ultimate proof of concept. For now, the authority lies in the data. A massive counter-drone market, a cleaned-up balance sheet, and a series of high-level defense partnerships that are just beginning to move into the production phase. Whether you are using the Robinhood app or a professional interactive brokers platform, the story of this stock is no longer about welding. It's about the future of energy-based defense. Maintain a close watch on the U.S. government demonstration dates, as those will be the true moments where expectation meets reality for the final time. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.